Welcome to Startuprad.io, your podcast and YouTube blog covering the German startup scene with news, interviews, and live events.
Hello and welcome everybody. This is Joe from Startuprad.io, your startup podcast and YouTube blog from Germany. Today I bring you another interview in our cooperation with Hessen Trade and Invest under the brand Invest in Hessen. Make sure to check out their website investinhessen.com. Talking about Hessen, the largest city, not the capital, but largest city in Hessen is Frankfurt. And in Frankfurt, I do have a guest today, Pascal. Hey, Pascal, how you doing?
Hi.
People who are long-time listeners to Startuprad.io may recognize you from Coin Analyst, but today we are here due to your venture called Cogia. Cogia, we'll talk about pretty soon, but the thing is you got listed mostly unnoticed from anybody else. So we will talk about your story and how you got listed in Düsseldorf. But first and up front, tell us a little bit about you and what did you and what brought you actually to Cogia to be an entrepreneur?
That's number one. I was born and raised in Darmstadt, another city in Hessen, and I'm a real Hessen boy, an Italo-Hessen boy.
And now we created a new category, the Italo-Hessen boy.
Yeah, an Italo-Hessen boy, and and now I'm happy to live in Frankfurt. My wife is also from Frankfurt, so that's a real big local play. I did my high school, it's kind of grammar school in Darmstadt. Then I went to Canada, did my degree in economics, major macroeconomics, and I had a minor in computer science. And my first actually computer language was Pascal, Nomen est Omen. Cool. And after my Canadian experience, I went to Taiwan, had a chance there to work for a software company 2 years. I learned and picked up some Chinese while I was there. And that company I worked for was actually then acquired by Corel, which is another Canadian company. So was kind of cool getting back to the Canadians in Taiwan. And then after 2 years of that, I went back to my home country and back to Hessen in a small town called Schwalbach, and I worked for Samsung, European headquarters there. I joined the SDS, Software Data Systems of Samsung. They made over 1.2 billion in revenues at the time, and I was responsible to sell their software, which they're not so famous for, but we did from 0 to 10 million. Build up that unit, and so I was actually one of the youngest EMEA managers at the time with long hair. It was pretty revolutionary for quite conservative company to be. When you live there, it's quite conservative. Work there, and then after that, I had a chance to work for a Silicon Valley company, and it's a spin-off or like continuation of HP OpenMail. Called Scalix after Scalix and introducing it successfully into Europe. I had another opportunity to introduce and bring to market a company out of New York, out of Silicon Alley, not so famous, but actually New York is going for Silicon Alley since Eric Schmidt is now living in New York, the new Alley. And that company, I grew from 40 people to 200. I was, I did 90% of the revenues. We did roughly 50 million in 3 years, and out of that, 90% was my revenue. So the company's revenue was 90% coming from me. So that was my trigger where I said, "Well, shouldn't I do this for myself? Wouldn't it make sense?" So I know that was the trigger, and that's how I started Cogia. And Cogia is a big data AI company, and it's basically my passion united. It's macro, catching all the data, understanding market trends in near real time. It's very exciting. And then AI in text mining is just a natural process, just to be, maximize on your results and trying to get more out of your results. It was a natural thing that we had to, get, look at machine learning to improve our results, right? To get more out of the data. So that's the reason why actually we happen to have, over 10 years of big data AI know-how in a space that at that time wasn't that hot, but now we're one of the lucky ones that has over 10 years experience in a very important space, and that's big data AI. And then I came up by hearing my friends suffering with crypto and research, and having fear of scam. That's how I started then Coin Analyst, just because it's a spin-off out of Cogia, because I wanted to help my friends. And one of those is a co-founder of that, Coin Analyst, which is the other company of mine. And Cogia is really the mothership. That's how it started all, right? And we are doing, our stuff, customer satisfaction monitoring for like Fortune 500 companies. But yeah, sorry, go ahead, Joe.
Mm-hmm. That was a point I was trying to go for. What was like the final decision you made before you decided to venture out for you? And of course, always important for our listeners who are early stage, first time entrepreneurs. How did you get your first clients?
Okay, as mentioned, like my big trigger for me to become an entrepreneur was, I grew a company from 40 to 200 people, and 90% of the revenues came from me. So I thought it's not very fair. I'm not getting any of the upside. I got a couple. I made $500,000, and I made 50 million for the others. It just didn't work out for me in that sense. So I said, look, I got to do this for myself. And so I started and invested my money into my new venture, all of it. And I actually talked about it in a fuck up night also, how I actually burned it quite fast. And I had some very exciting experience over there as well. So my first customer, how did I get them? It was, of course, a little bit through contacts, talking to your network and trying to, telling them what you're doing. And so that's how you basically win your first deals. That's where you are willing to do killer deals for them, right? A lot of goodies for a good price just to get your foot on the ground, right?
And now take us through the journey. So basically you started some text recognition and with AI, and then somehow ended up with customer satisfaction. How did this journey go? And we may add that it was like more than 11 years ago that you founded Cogia.
Yeah, so it's a long time. Yeah, we pivoted a bit. We went through quite a bit of interesting evolutions. Number one, we wanted to go and do social media monitoring, because that was exciting to me. That's big data. I can use sentiment analysis, which is with natural language processing, which is the first piece actually considered to be part of AI, is NLP, machine learning, and deep learning. So that's actually the first introduction into that world. And I thought that area is so exciting, because language are complex to identify. So that's why we focus on the area of text mining, sentiment analysis, and the big data means crawling technology. We have actually a patent also out there for our crawler, a very unique methodology that we use in crawling the data. So we started in the area of social media monitoring. I thought this is the best place to apply our capability. The capability is text mining. The capability is crawling big amount of data, because we were specialized in crawlers. I had that background. We had that background, and yeah, that's how we started. And then we had fierce competition coming out of the US. And unfortunately, then we said, okay, that's getting not fun. It's a hard market to win these marketing guys. Let's find our niche. And then we identified that the niche that wasn't occupied was customer satisfaction. And here we were able to succeed and be better than the competitors. Like small Cogia is competing against Qualtrics. Qualtrics right now valued 24 billion, and we beat them 30 times. It's like having like Darmstadt 98, which is a soccer team in Darmstadt, where I'm from. It's second league team beating Barcelona, which is a Champions League team, 30 times. So that was my trigger. I said, look, I'm actually Champions League in this area. I should, get the proper funding for that too. That's when we get down to why I went to the listing area, is trying to get the funding to help me, grow and, become a sustainable Champions League player, not just a lucky one that just was lucky for a season, but I want to make it sustainable. Anyway, so talking like in, metaphors kind of thing.
What do you do for this customer satisfaction before we get into how you got listed?
I didn't catch your question in the beginning. What do you mean with customer satisfaction?
What kind of services you actually provide there? You monitor the behavior of the clients on the website. You basically analyze the feedback, the social media content they are posting about your brand. What do you actually do there?
Okay. Yeah. In this case, actually, the majority of the customers, control the touch point, like through email with the internal customer base. Once they had, it's more like in the after sales. So once you've had the contact with the company emails you with a link and asks you if your experience was that great that you would recommend it. Maybe would you recommend it to your friends or to your contacts? And that's called Net Promoter Score. The NPS is the big thing that brought like a big drive for us, because it just reduces everything to one question. 1 to 10, would you recommend this dealer, this shop, this product, this company to your network, to your friends? And then the question is, explain why you have given like a 1 or a 5 or 8 or 10. And that explanation of why is the text that we analyze automatically and classify we are doing sentiment analysis there, emotion analysis, all those pattern recognition applications with that text. And the main focus was analyzing those comments that came back via mail. It could be and through the call center. The call centers called the customers and they typed in the feedback, and we had that digital feedback also analyzed. Now, we expanded with social media interest, because in the beginning they didn't care that much for it. Due to Corona, that enhanced everything. So now they couldn't, avoid the fact that, hey, you have to also look at your touch point social media, because partially that's your only way how you're getting in touch with your contact with the customers. So you might want to analyze that touch point, and that means like a Google Maps and your personal social media sites. And that was a strength of ours, that we were able to hook into those APIs and forums, whatever is relevant. We can catch that data very easily and integrate it in your one central customer satisfaction dashboard, and then also include like the whole process of creating an issue management, like tickets, like that, to assign somebody to take care of it.
Mm-hmm. Okay, now we get an understanding what you've been doing, how your journey has been so far, and now take us through the journey of getting listed on the open market on the Düsseldorf Stock Exchange. We may add that we will talk about 2 different legal entities for now. The Cogia AG, that's the entity that's actually listed, and that is basically a PLC company, so one that has shares that can get listed, and a GmbH, which is something like a LLC company that is usually privately held, and the shares are not supposed to be traded. So my understanding is you set up an additional company, Cogia AG, and then got it listed on the OTC market, on the open market at Düsseldorf Stock Exchange, which is one of the smallest stock exchange operators here in Germany, right?
Correct. Well, what I did is, before I did that move, I created the AG, which in Germany, for the people that listen to us internationally, has a higher threshold to be created. It requires, compared to a GmbH, 4 times or 2 times more amount of cash minimum for a small AG. So you need at least 50,000 euros to get an AG founded, which is a mini AG. You can have them bigger. Our AG is based on a 3.5 million capital, right? But with 50,000, that's the minimum, and that's quite a barrier of entry. Having 50,000 euros to start. And then the GmbH, by the way, is only 12,500 euros, right?
In terms of paid-in capital, but we will try to keep the accounting terms as low as possible. So you set up this legal entity that can be listed, and you got its shares listed on the OTC market, open market in Düsseldorf Stock Exchange. And then what?
Okay, so first we created the AG. And before we get listed, and then we did like a reverse takeover, basically, of my GmbH into the AG, so that you have the operational business in the AG, right? It's like the holding structure. And once you have done that, you give the company substance, because without substance, you couldn't just get listed. So the company had to have something, and because it owned all the assets of the GmbH, that was the baseline that we applied to Düsseldorf if we could get listed. Now, Düsseldorf, they go in, you have to prepare everything. You have to have your audited books. So there's a whole homework of things that you need to do before you can apply to a stock exchange and try to get listed. So all that homework needs to be done before. So you have to have all your, audited paperwork, all your stuff organized, well prepared expose, we created, either you have you do a pamphlet, like a brochure, which is 50,000 euros that you have to pay, so that you can market your going public project, or you do it without it, and then you still have to do a light prospect, which is at least 30 pages. All that work needs to be done with all your financials and your futures. Once you have all that prepared, which takes quite a bit of time, then you can try to apply at the exchange, and the exchange looks at your application and then decides you have to apply. You have to present yourself like a job position almost, right? And explain to them why they should list you, and give them faith that you are a good company to go with, especially when you are kind of small like me. I mean, we are like a micro cap. So normally exchanges want people to have a little bit more beef on them. So we, for them, considered like one of the smallest, listings, I think. However, what they liked was the big data AI technology, the future that we're bringing in, our outlook, that we had great customers, and the rollout. I mean, at that point, I had, kind of informally already, I knew already that I'm going to win Volkswagen worldwide. I had BMW already in 30 countries, so we have Lufthansa, all those good things that they felt comfortable to go that route to let us go public. Right? So that was the process. So it was quite a hard process. We didn't apply only for Düsseldorf. We tried also other, but just the way our timeline was quite tight. We wanted to be public by the end of 2020 still, right? We came out on the 18th. Many of them didn't want to do this stuff anymore. They say, hey, we're this holiday period, and it's not, not everybody is open.
Pascal, du musst ein bisschen näher rankommen. Ja, viel besser, weil stellenweise hat man nur bis zu deinem Mund gesehen. Alles gut. Maru, please cut the German-speaking part out. Thank you. Yes, you've been talking about like a micro cap. I was looking, we're recording this on 15th of November. And when I look at this, you have a market capitalization somewhere around $9 million US. That's not too big, but it's a start. You were talking about a prospect, so a prospectus. That's basically a document the lawyers make for you. Basically, they go through all your company and display in the appropriate legal way all the risks, all the opportunities to the potential investors, and they can go through it. And after they've read it, in case you understand it, it's no easy language, no easy numbers, then you feel well prepared to actually invest there. That is what you guys doing. When you look a little bit through the numbers in the investor relations, I really like that, because then you really have a great source of numbers here in Germany. Since many companies are privately held, you don't get access to all the numbers. And I realized you guys did not post any revenue for 2020 or 2021, but it's more an accounting gimmick than actually missing revenue, right?
Yeah, it's just what it needs to be published. We did this, what we had to, the balances that we have to publish, we published, of course. We are forced to publish. And that, what is required, the legal requirements, we publish, of course.
Mm-hmm, exactly. And so since you're doing zero revenue right now, according to your investor relations document, it's a growth investment, or how is the story there?
It's a growth investment. Yeah. And we're trying to raise money also to help us grow, not just to invest for growth in organic growth, but to also have inorganic growth. So that means we are looking to raise money, to do M&As, merger and acquisitions, strategic merger and acquisitions, to help accelerate the growth. So the growth has two components to it, which is the organic and inorganic method. That's why Elastic was our first acquisition, by the way. So we said it, we promised we're going to do it, and we executed. I was pretty excited that I was able to, execute very fast after my capital raise on my first M&A, which I, announced that I was planning to do it this year.
So it has to be growth investment, right?
Yeah. So we have currently with the AG, which is listed, we have zero revenue, right? Because however, we have done the consolidation, we introduced the GmbH into the mother company, basically in the holding. Now that's how the mother company can consolidate and present the revenue. And with other acquisitions, it all also consolidate. Or when we grow, it consolidates as well, because the growth will be shown in the AG numbers. So that's how we can start with a fresh company that actually had zero revenue, like a holding structure, and be listed with it, because it uses the revenue of its daughter companies, basically, and can consolidate it as its own revenue to the outside world.
Bottom line for everybody without an accounting degree, you can only show the revenues at the end of the year, because the company says, okay, that's all that I own, and that's all the revenues I'm showing, and it shows the subsidiary revenues of Cogia there.
Exactly. So thank you, Joe. That was a difficult birth, but I appreciate it for your help.
Yeah. So you're listed for many reasons, including the opportunity to make a takeover. You've already acquired a company. Can you take us through this journey there?
Exactly. So part of our growth strategy is the inorganic growth. So we had looked at the target already. I started it last year, October. I started looking at it, and then we reached out to the target. I understood how much it started to cost, and then we went public. And that's why we raised some money, and that was the baseline that we used. And while we did that, we had already discussions and had a term sheet already planned. Even so, we didn't even have yet any money yet, but we were planning to get it. So there was a plan behind it. So all that process worked in parallel, and then once we successfully did our placement, a successful placement right now, we did it in May, June, roughly in that time period. we raised 1.5 million euros. So I had with that the baseline of my first installment payment of my acquisition, which is Elastic, which we are totally excited. We bought Elastic.io. And it's an iPaaS, it's an integration platform as a service. And we just bought it September 10th. And it was a big act. It was an exciting process to go through all the due diligence. We went from a human due diligence. I make sure I had the management behind it, because if I do the move, I needed to make sure I don't lose anybody. Being in the IP space, being in software, the capital of in an asset is not the tangibles, but the non-tangibles, meaning the people are my assets. So the most important thing for me was not to lose anybody of that company, or not to lose anybody good.
That's all, folks. Find more news, streams, events, and interviews at www.startuprad.io. Remember, sharing is caring.